because, guys and girls, I'm on live with the great man, Louis Christopher, one of the greatest brains of real estate and data economics in the country. The guy that I said gets it less wrong than anyone else. Maybe that's the best way to sort of say it. I think no one gets it ever right, but Louis often has got a far better record than a lot of the people that are in positions of seen as analysts of the real estate market. Of course, Louis Christopher is the founder and the managing director or CEO. What title do you use, Louis, of SQM?
Call me managing director, Tom. That's fine.
Okay, the managing director of SQM, Louis Christopher, who has joined us again. He's been very, very kind to give his time during COVID. And we are now streaming live on the real estate Facebook community that follows my content. And we've invited a few people to come in and watch it via Zoom. So, Louis, firstly, it has been an incredible period of real estate. Louis, I remember sitting with you one evening when we were in lockdown, in the Sydney lockdown. It was that 4 to 5, 6 week lockdown period. And I ran a Zoom webinar. You were at your home. And at the time, I clearly remember, we look forward to the day that the football stadiums get crowds again, that people go into restaurants and bars and pubs, and people are back onto public transport. And that has in fact now happened. But what's the most interesting thing, Louis? Nearly every person that predicts real estate in the future got it dramatically wrong this time last year as to what would happen in the real estate. Without naming names, there were certain banks. I mean, we can name the bank because that one there is well known. It's in media articles. CommBank said more than 30% drops expected. Others, were sort of saying 10 to 20%. But Louis, you're about to let me know that in the month of April, we had the biggest, I can't remember a time when we had so much growth in 1 month in asking prices.
Yes, Tom, and you've made some interesting points there. I mean, let's firstly discuss this time last year. So this time last year, as you rightly pointed out, we were in lockdown. The country could barely get toilet paper. There was a run on the bare essentials. There was a collapse in auction clearance rates. You may recall we had some weekends when auction clearance rates fell to the 20s. That was effectively, on our numbers, that was a record low. I've never seen clearance rates that low in all my career. That takes into account when we had interest rates at 18% back in 1990, takes into account the GFC. So it was looking pretty bleak. The outlook for the housing market this time last year was looking bleak. And it could have gone two ways. And we said, look, there was two ways it could have gone. And that was that if restrictions stay with us and the government doesn't come to the party and we do not get on top of the COVID cases, we could have a major downturn in the housing market because the leading indicators were suggesting we would. On the other hand, if we were going to get on top of the COVID cases and restrictions were lifted, we would get a V-shaped recovery. In the end, that's how it played out. We got a V-shaped recovery, assisted, of course, with massive government stimulus, JobKeeper, JobSeeker, home builder, interest rate cuts. That helped support the economy, and it also gave a big boost to the housing market. And so, sure enough, yeah, we've had a V-shaped recovery. The March quarter, as it's been well reported on, was a massive quarter for the housing market. Dwelling prices rose between 6 to 8% for just one quarter. That was predominantly houses, mind you, and we're still seeing weakness in units. And then when we look at the numbers which we're releasing today, we can say that for the month of April, our view was that the market still was relatively strong in April. You've just alluded to the fact that there was a big rise in asking prices. We can tell you now that nationally, vendors were very confident for the month of April. They lifted their asking price by 3.7% across the capital cities. But in Sydney, as an example, they lifted asking prices for houses by 6%, which is huge. So vendors were very confident for the month of April. And looking at the auction clearance rates, looking at how old stock fell right away for the month of April, I think it's safe to say that vendors largely got what they wanted, Tom.
Yes. So Louis, as an auctioneer, I have noticed that real estate agents are telling me when they've signed up the auction, they've agreed that this is roughly where the property price falls into. 5 weeks later, they're given a reserve by the vendor, because they always give the reserve a day or two before the auction, or sometimes on the day. And they've been given reserves that are much higher than what the original figure that was being discussed with the agent. So this reflects what you're sort of saying. Vendors are bullish, and some of them have actually moved from what I call the optimistic zone to the win lotto zone. And agents are struggling with that, because vendors are sort of saying, look, that's sold for that. That means my house is going this. But as you've alluded to, there is instances now that they are getting those prices as well.
That is true. Now, of course, the risk in all this is that the vendors get overly confident on the market. They risk not selling, because buyers will become increasingly cautious. There's already some surveys out there now to suggest that buyers are becoming more cautious about the sharp rise in the market. But they're still overall buying. Maybe not at such hectic rates that we had, say, in the December quarter and the March quarter, but they're still largely there, and that's still supported by, they're still supported by low interest rates, higher rental yields, and we can talk about that later, the difference between the rental yield in Sydney and all the other cities compared to interest rates. And that's encouraging investors into the market. So overall, momentum was still there in April. We were a little bit concerned by the end of JobKeeper, that potentially the end of JobKeeper, the revision back to the base level of job seeker and the end of home builder would mean potentially a market slowdown. So far, we're not really seeing it to say that there's a slowdown. It's not to say we won't get some type of moderation. I think if vendors keep lifting their asking prices by 5 or 6% a month, you'll get a slowdown sooner or later. Sooner or later, buyers won't cop it. But for now, we think buyers have been out there paying the higher asking price.
So Louis, let's do quickly a bit of around the grounds, and if you can give me what's happened, and maybe tell us what the average price is now across Australia, and we can narrow down on a few of the like in Sydney, what is the average price for a house? Okay,
so the median house price based on actual sales transactions is running on our numbers at about 1,350. That's $1.35 million for a house in Sydney. The asking price is actually higher. We've got it nearly at $1.5 million right now.
So this is the national or the Sydney?
That's for Sydney. So okay. Nationally, the asking price for a house, vendors are now seeking just over $1 million at $1,044,000 for a house. And nationally for a unit, it's running about $563,000.
Have unit asking prices gone up as well?
No, they're falling.
Right.
So this is the thing, that's quite a contrast in the market. Vendors are very confident about their houses, but vendors who own a unit, less so confident. Asking prices actually fell for the month by 0.2%. They fell in Sydney, they fell in Melbourne. They rose a little for units in Brisbane, but overall, the other cities flat to slightly up. But yeah, they actually fell in Sydney and Melbourne. And we know the reason behind that, and that's because the inner city unit market is still quite weak right now.
Now, Louis, I'm curious, Sydney house prices, the asking price went up 6% for the month of April, which is quite extraordinary, 6% in a 30-day period. Did Melbourne go up, houses?
Yes, they did. It went up by 1.6% for houses. So vendors, that's on its own, putting the Sydney number Just beginning the Sydney number for a 1.6% rise just for 1 month. It's still quite strong. So yeah, Melbourne vendors for houses were pretty confident for the month of April.
What market in Australia didn't have a big increase in asking price in houses, or it's just not as, strong?
Brisbane was a little bit flat. So for houses, we actually recorded a slight decline of 0.3%.
Yeah.
And Canberra was more pronounced in terms of its weakness. It was actually down 2.4% for houses. So yeah, there's been some really mixed numbers coming out of Canberra. We're not as bullish on the Canberra market as what we were at the beginning of the year. It's been a little bit weaker than expected.
Now, Louis, the big report I want to speak to you, because a large audience that follows the content that we put online here is the real estate industry. And of course, they're very, very focused on turnover and listings and sales volumes.
Yes.
And today is the day that you're releasing your stock on market report, the SQM stock on market report. For those of you that want to dig deeper and sort of see more of what Louis and I are discussing, I suggest you go to SQM, the website. But for those that are listening on here, Louis, stock on market, what's your report saying?
So total listings across the country in the month of April, there were 262,000 listings in April 2021. Now, that was up by 2.4% compared to March, which is a little bit abnormal because April is normally a bit of a quieter month given the public holiday period. So, yeah, it did rise, and we recorded rises in all cities except for Hobart. This time last year, so remember, it was 262,000. This time last year in April 2020, we had 292,000 listings. So overall, for the course of the last 12 months, there's actually been a fall of about 10% in total listings across the country. Now, when we split those numbers, when we look at, say, new listings versus, say, old listings.
Define a new listing versus an old listing.
So how we define it is a new listing is a listing that's been on the market for less than 30 days.
Okay.
And an old listing, well, we draw the line at 180 days. So listings that have been on the market for over 180 days. Now, if you come to our website, anyone's familiar with our website, we've actually got various splits there. So we've got between, say, 30 to 60 days, 60 to 90 days, and so forth. That's all mapped out for free on the website. But just for the simplicity of our media release, we say here are what new listings are, less than 30 days. Here are what old listings looking like over 180 days. And what we're finding, what the numbers show is quite revealing, we think anyway. And that is firstly, when we consider old listings, the old stock, Tom, is moving very quickly. So there's been a big fall in old listings of about 33% compared to this time last year. And when I see falls in old listings, it means to us that stock's getting absorbed. All those vendors, let's think about why you have an old listing. 9 times out of 10, it's because the vendors always has asked too much for their property. Am I right about that, Tom?
100%, 100%. There's only 2 reasons why properties don't sell. It's either the price is too high or there's been no advertising or a poor agent. But most of the instances, the agents I work with, there's normally a disconnect between market value and vendor value.
That's right. So when you start to see a big fall in old stock across various cities, to me, that's telling me one thing. That means that finally those vendors with that unrealistic asking price have been taken out. That property's finally sold. And that tells you something about the market.
Spot on. So, Louis, so can you just, again, focus on new listings? So are new listing numbers up month on month?
So they are up in some cities, but overall they were actually down for the month. So they rose significantly in Sydney. So new listings for the month of April in Sydney rose by 4.8% compared to March, which is really abnormal, Tom, because as mentioned before, April's normally a bit of a quieter month. So it rose by 4.8%, and in Melbourne, new listings rose by 1.8%.
It's very abnormal, Louis, because I've got to tell you, we have a period between Easter, school holidays, and Anzac Day, right? That 4-week period which for many vendors says, listen, let's not participate in the market during this period, right? We got the school holidays. We know we got that Anzac Day long weekend. That Anzac Day long weekend is then also layered with Easter. So I am absolutely very surprised that we didn't have a big decline in stock levels in April, but we had an increase.
We had an increase. Now, I've got to say, when I look at the numbers week on week, a lot of that increase came through in the last week of the month. So just literally last week, there was a big surge in new listings that made it through onto the monthly numbers.
Okay. So the reason, Louis, the reason why this is extremely relevant is that in a real estate world, we have a term called the absorption rate. And when you've got a seller's market, what actually happens is stock is absorbed quickly because there's low levels of stock and lots of buyers. When you've actually got a marketplace that's got a very low absorption rate, it means that you've got a lot of stock but not many buyers. I think real estate agents have done reasonably well in recent months. And the reason why is that there's been okay stock levels and there has been lots of buyers. So essentially, there have been real estate agents that have been having some of their best months in their career because if you've got the stock, there's buyers there.
Spot on, Tom, and it's showing up in these numbers. And that kind of Goldilocks conditions for real estate agents continued on into April, from what we can see in the numbers. And look, we're just starting out in May. We'll see what the final clearance rates come in for last week, including the Saturday, but I suspect it'll still be relatively strong. I suspect these Goldilocks conditions are going to continue on into May.
Louis, I know I might get you off guard here because we weren't going to discuss auction clearance rates, but you did speak to me off air 2 weeks ago on the phone that during that school holiday period, there had been a slight drop in clearance rates.
Yes.
Is that any? Do you think that that's like alarm bells, or do you think that, hey, not a big deal at this point of time?
It's the latter. It's not a big deal at this point in time. So yes, there was a bit of a fall compared to the month of March. Now, we often get a little bit of a fall over the course of April with clearance rates. One thing we had to consider was, with the fall, was did the end of JobKeeper mean anything for the market? And looking at how JobKeeper has ended, the fact that there's been strong job creation for what we can see through the month of April, reduces our concern that the end of JobKeeper was going to mean a big slowdown in the marketplace. I think we can safely say now the end of JobKeeper hasn't really disturbed the market significantly. So our expectation is that clearance rates may not be at the heights that we saw, we'll say February and March, but they'll still be relatively strong for the month of May and June. So absorption rates, we're not really expecting any major dip. Of course, as I mentioned earlier, if vendors keep aggressively lifting their asking prices, sooner or later, buyers are going to respond to that. They're going to become even more cautious. But we do not seem to be at that point as yet.
I'm quite happy, Louis, when I wake up on the weekend and look at results. And by the way, I actually think the methodology, and I'm going to say it here online, the methodology, Louis, that you are using yourself for data is extremely robust. So I want to let people know how SQM comes up with its clearance rate during the week. We know in the real estate industry that many agents don't report figures to phone callers from data companies, particularly when properties haven't sold. They have this preference to avoid taking the phone call, let's say. Sometimes they're uncontactable. And often, Louis, that many of these properties that do actually not sell on a Saturday do sell over the next 48 hours. And we get a clearer picture. We get a clearer picture by early on, the new week, Tuesday. And I believe SQM's methodology includes looking at the portals and seeing what's been updated, what's been sold, and then between the work of the portals, by Tuesday, you've got a very accurate clearance rate.
Tom, the truth is we get a read on 100% of all the auctions that happen by Tuesday, 100%. And we don't need to ring up a single agent to do it. How we're doing it, it's pretty simple. As your audience may well be aware, we monitor all listings online. Now, Tom, as you know, when an agent lists their property, when that property, and let's say they're listing it for auction, when that auction finally happens, the agent will adjust their advertisement after the event. They'll adjust the advertisement to say either that property has sold, or if the property has not sold and it's still available for sale, they will give new inspection times for the property. They will say, yep, property is now available for viewing this Wednesday and available next Saturday for inspection. And straight away, we know then the property did not sell at auction. And if the property is being withdrawn, so if the ad's been completely taken down, then it's fair to say that that property has been withdrawn or it's gone to another agent. So the odds are it didn't sell, because the first thing that happens if a property has sold at auction is the agent wants to tell the world. And fair enough, they've succeeded. And they do that by adjusting their ad and saying, sold at auction. So yeah, we get 100% of the results. We do not need to publish a preliminary rate. Our clearance rates are getting more and more observance. We're getting more and more people asking questions, which is great. We've got a full methodology that we put up. And for people who want to reconcile, we put up every listing, every property that was available for auction before the event and after the event, so they can see for themselves what's happening.
Now, getting back to the point I wanted to make is that we agreed yesterday that, hey, listen, having the clearance rate drop a little bit, having the heat leave the market, having FOMO disappear or at least reduce, and having the frenzy sort of just leave the market is what we really want. And the reason is, if that doesn't happen and we continue to run in a booming market where buyers are being priced out, where we then have the risk, and it's a significant risk, that someone externally interjects and says, we need to slow this market down. It's going crazy. It's overheating. And when that happens, Louis, who normally intervenes? I always get mixed up, the government or the Reserve Bank, which is the government?
The government, the Reserve Bank is the government. I think you're thinking of the Reserve Bank of Australia or APRA, the Australian Prudential Regulation Authority, a regulatory authority, otherwise known as APRA. So back in 2017, you may recall, there were restrictions placed on lending, and that was done by APRA. They instructed the banks to reduce lending, to be more conservative in their lending, and the banks had to follow orders, and they did so accordingly. And that created the market downturn we had of late 2017 and into 2018, all the way up until the election of 2019. So with a booming market, there is an increased risk of the regulatory authorities stepping in and reducing lending or reducing the ease of lending. Now, if we were to continue to have these booming market conditions that we had for the March quarter throughout the course of this year, I've no doubt APRA would step in. If, on the other hand, we do see some type of moderation in the market, it's likely that APRA will stay quiet and the market will be left to its own devices.
Okay. Louis, let's catch up again in the near future, because I'm more curious than I've ever been in the economics of this marketplace. I think that right now, to real estate agents, I would suggest that, hey, make hay while the sun shines. These are amazing conditions that we're in at the moment. And I think that one of the things that you can do as a consequence of watching this video with Louis from SQM is to essentially get on the phone and ring up all your prospective sellers, people that you've got on your database that have indicated an interest in selling, and sort of say to them, hey, listen, it appears that we've had this marketplace that, the heat has eased a little bit. And right now we know that there are a lot of buyers out there that are looking to buy. And we also know that there is stock out there. So this isn't a bad time, Louis, for someone to do an upgrade or a downgrade for that matter, right? They'll get decent money for their home. There's stock out there. It's a great time for the real estate agents and the stakeholders in real estate.
Yeah, I agree. It is a good time at the moment. I think as the year progresses, agents will start to have the challenge of vendors being quite unrealistic about their asking prices. Vendors could become very over exuberant about asking prices because of all the reports of the media that the market's still rising. So I think agents will eventually see increasing challenges of getting their vendors to be a little bit realistic about the market. But we're not there yet. Like I said, it's still pretty exuberant conditions right now. We did record a large increase in asking prices, particularly for Sydney houses for April. And we can see through the numbers that, look, hey, vendors actually didn't achieve their asking price. So there you go.
Louis, you're following the budget coming up in the next week?
Yes, and I do note that our federal housing minister alluded to the fact there might be some stimulus for the unit market. So I'll be very interesting to see what they do on that front.
All right, Louis Christopher from SQM. Today's the day that the stock on market report hits his website. So go to sqm.com.au. Is that right? sqm.com.au?
SQMresearch.com.au.
sqmresearch.com.au. There are so many things on the website you don't have to pay money for. That's going to give you a heap of information. And of course, there's a lot of stuff that you do have to pay money for. That's not very expensive at all. Can I ask you, Louis, out of everything that your clients rave about in terms of reports that you produce and data, what's the one that, we can sort of give a bit of a shout out to? What product?
Oh, we have a few out there. I got to say our biggest seller is always our distressed properties report. So that's the one where, lots of property investors are very interested in. We have literally about 9,000 distressed listings out there in the national marketplace. And that's been coming down. So there's been less and less distressed listings. But
so the opportunistic buyers go to SQM Research. They get the report, distressed sellers, hoping they'll get themselves a good buy.
That's exactly right. They have to be quick though. When I run through the report, we update it weekly. The genuine bargain properties move very quickly. Let's just say that.
So Louis, I'm curious, how much does that report cost?
We sell it, if I recall, for about $39. And they can unsubscribe anytime they want.
So it's $39 a month?
Yep, that's right. But they're not locked in for 12 months. They can walk away after a month if they want to. Okay,
I'm going to look at that myself, because if there's an easy process, way that's produced by technology that allows you to see who's got a propensity to be a major seller and potentially a major discounter, that would be interesting to know. Anyway, Louis, thank you so much. Have a great day. I know it's a busy day when you launch a report. You've got press releases going. You pretty much get interviewed on a lot of the media outlets, both on TV and radio. So we'll leave you to it and have a great day.
Oh, no worries at all, Tom. It's great to be with you and your audience once again. I enjoy getting into the numbers, especially from someone that's really on top of their game in the industry and understands what's going on.
Thank you so much, Louis. And I want to let everyone know very clearly here, there's no financial interest. There's no, kickbacks or anything going on here. There's no financial benefit. I just like to bring on air someone that I know is got an extremely great helicopter view on what's going on with data. So, Louis, thank you so much. Enjoy your day.
Thank you.